Everyone on YouTube is calling Palantir the next trillion-dollar AI company out there, but I just don't buy it, at least not yet. Don't get me wrong, Palantir Technology is super impressive and their story sounds pretty world-changing. But when you look at the numbers and the financials of the company, I think investors are massively overpaying for the stock, which we will break down. I'm Matthew, and in this video, we are going to break down why I'm bearish on Palantir, even though it's one of the most hyped AI plays out there in the market right now. Let's get right into it and not waste any time, and subscribe to this channel because you're going to get exactly what you're going to see today. More of this, more stock content, and more stock analysis. Now, Palantir just announced their Q3 earnings, and it seems that the stock is selling off after hours. And it could be because maybe they're priced to perfection. Let's look at the valuation right here. Palantir currently has a price to earnings ratio of about 480, and that is immense. A regular company of software should have anywhere between 40 to 100. 200 if they're an insanely great company, but a PE of 479. But we can't really look at a company just based off PE when it comes to the software business. It might be unfair. A lot of investors may say that's not fair. So traditionally, software companies are evaluated on a price to sales ratio, which is how much they can get in sales versus how much they're willing to pay for. Like an investor is willing to pay for this amount in sales. Typically, the price to sales ratio of any software company, a great software company, will be about 10. Palantir has 140. It just doesn't itch the scratch that I need in order to eke out as much profit or alpha in the stock. 140 in a price to sales is an insane amount of money to pay for a company that I mean, everything is relative, right? Like there's earnings growth that we can look into to try to make it justifiable. But then that leads us to, what is the earnings growth kind of looking like? Now, if you look at the price to earnings growth ratio, which is, the market cap divided by the expected earnings growth, and we could see that the PEG ratio is about 7.4. And if you follow Peter Lynch, he says that anything above a 1 is going to be a little bit on the higher valued side. We're looking at a 7.5 here. So this is an insane price to pay for the company today. But is it worth it? Let's break it down. Now, on the top line, revenue has been growing at an insane pace at 47%. But you kind of have to realize that their revenues are still at about $3.8 billion in the last trailing 12 months. That is a very minuscule, very small in relation to what their market capitalization is. If you look at their market cap today, their market cap is about $491 billion, which is why you have a price to sales ratio so high, because the revenues are so low. Now, I believe investors are willing to pay this insane amount for this stock because they believe revenue is going to grow immensely with government contracts and enterprise sales, and that is going to lead to higher profits later on. But how long do investors really need to wait for that to happen? Because this is an insane amount to pay given the current day-to-day life of Palantir, the same exact sales that we're looking at on this screen. $3.8 billion. But when it does come to net income growth, I would say this is a very great number to be growing at. 130% is nothing to sneeze at. Great companies grow at 30%, and that is something that we'd love to see as investors. But when you have a company that is getting you $1 billion and their sales are almost $4 billion in the year, it's not the worst, but it's not the best either. I would want to see net income increase very, very much higher in the future. If I were a shareholder today, I would be expecting Palantir to grow revenues to at least 50 billion in the future, and that is to justify the current valuation of what it is today. If you look at the shares outstanding, they are diluting shareholders hand over fist. They are giving out a lot of stock-based compensation to where you're actually able to see that here. There's more shares out there. Shareholders are getting diluted, and you thought that you owned a small piece of the pie. Now you own a smaller piece of the pie by exactly 6% because they've granted more shares out there to give to employees, and they're not buying back the shares either. So they actually are diluting shareholders, which is not a good sign. But it's totally normal for software companies to actually give stock-based compensation because most of the times they are not strapped with cash to give higher pay packages. And likely, if you are a top talent in Palantir, you want to be incentivized by not only your base pay or a bonus or a 401k match, but it's the equity, right? And the equity is what drives high performance. So this is actually rather common that you'll see in software companies and tech companies overall. So I'm not like the most worried about this. It's just not delightful to see as an investor. Now, there's a lot of hype around Palantir when it comes to AIP or their AI platforms. And AIP is really a revolutionary AI system. At least it's marketed as that. And this is going to be for large enterprises that you see on the screen here. There's testimonials where people are using AIP to get rid of manual work. 45 minutes cut down to 5 minutes. That is almost a eightfold, like a ninefold in productivity. And it's been about a year's journey, and tens of millions of dollars have been saved with AIP, and we can't wait for what's next. That's American Airlines speaking out and saying that, hey, the product here is actually good. But what intrigues me the most is that US commercial, which is one of their revenue segments, is either commercial or government contracts. This is accelerating in their Q3 earnings that just came out, along with the AIP revolution. Commercial grow at 121% year over year, 29% quarter over quarter. These are astounding numbers for a software company or a company that is quote unquote changing the world. And US commercial customers are growing at an insane pace at 65% customers. They're getting more enterprise people into the door that are actually paying for the software here. Customer count grew at 9% quarter over quarter. And these are astounding rates of growth in these bottom sections here. You could see that US commercial remaining deal values are growing at 200%, 30% quarter over quarter. They have 2x their commercial deals year over year. The US commercial deals close with $5 million or greater is about 5x, which is very great for a amount of growth that we're looking at here. US commercial contract values of about $1.6 billion. Now, we saw that they are able to generate a lot of money through commercial contracts. It's almost about 50% of their revenue. But I believe the majority of this growth that we're going to see within Palantir is actually going to probably be through government contracts. And one, given that a contract alone is very sticky, a software business is very sticky. Once you use it, there are high switching costs. Imagine if you are the US government and you are using Palantir and you want to switch to a cheaper product that might get you 70% of the results. It's very difficult to switch because you have downtime. If you have downtime, especially in the government, things can happen very quickly, and the entire world can go down. We saw AWS have downtime for, I don't know, half a day, and the entire corporate world was flipping out. So could you imagine if that were to happen on the same scale like Palantir? The government just would not allow that to happen. So I believe that the government is going to play a very pivotal role in the success of Palantir and getting more revenues that are going to lead to the bottom line. Now, in the software business, there's this thing called the rule of 40, and that is essentially taking your revenue growth plus your profit margin. And Palantir's has been able to grow insanely from 54% in Q4 2023 all the way to 114% today in Q3. That is astounding for any company, any software company. I think this earnings, they've actually blown it out of the park. You could see here that their revenue grew at 77% year over year and 20% quarter over quarter. And this is actually driven not by government contracts, but by US commercial. We could see that they're actually reported $883 million. And the previous year, it was $499 million. So that is an insane amount of growth in one single year, which is probably why people are so excited about Palantir. Now, if you compare commercial to government contracts here, you can see that government is actually growing at 52%, nothing to sneeze at still, but this enterprise commercial is growing at 121 year over year, and that is what's really driving the story here in this quarter. Overall, they're still able to get more money out of government contracts. It's more reliable. There's less switches. There's less people just coming into the product and dropping off. But overall, these two are going to be very important for the growth of the company to drive profitability back to shareholders one day. Now, Palantir is infamous for government contracts, and I pulled up this article where Palantir landed a $10 billion Army software and data contract a couple of months ago. And if they can keep getting more government contracts day in, day out, then maybe this company could be worth a fraction of what it is. I'm just kidding. But overall, I think that the company is doing very well in terms of growth. As a company, it is doing very well. I just don't think that it is worth paying what you're paying today. You're getting a company that's growing very quick, very fast. It has government contracts, there's a reliability from the government, and it's also growing the portion that's not that reliable, which is commercial. That is where they have to actually close on deals. But overall, I just don't know if paying the amounts that you're paying for at a $491 billion market cap for $4 billion in revenue is worth it. I just don't think so. Now tickle me if I'm wrong, but maybe the stock does go higher. I never want to call a bottom or I never want to call a top on any single stock, but this is one that I will not be touching. This is one that I do think is impressive on a earnings standpoint from the last recent quarter they've produced. Granted, they're a great company and they have an insane amount of growth coming for them in the future. I just don't know if today they are worth it because a lot of things need to go right, which is why the stock did sell off today, which is why they are priced for perfection. People think that Palantir probably should have done better, if not maybe 1.5 or 2 times better than what they actually reported. And they probably should have given better guidance on where they're going to be in the future. But it's just that this company has run up so high in the past year, it's already up 394%. People are expecting the best of the best for this quarter. When the earnings come out, they expect nothing but top line to grow at 100+%, to grow earnings at 150 to 200%. That is what is expected of the company that you're paying this much for. Now, at the end of the day, it's kind of looking at a company like this and trying to figure out, is it the narrative or is it the fundamentals that are driving the stock? And at the end of the day, I believe that Palantir is actually just a story stock. If it trades more on Alex Karp's charisma, and if AI mega narrative is going to be the story for the stock, then that is going to drive the entire company. Well, that's what investors are looking forward to. It's not the fundamentals that they're really looking at currently. Maybe it's a mix of both, but it's become a story stock. Now, when the sentiment is euphoric, it just doesn't take bad news. It takes less than good news to send the stock down 20, 30, 40, 50, 60%. It's happened to many companies out there where when they're priced to perfection, it's very difficult for that company to go back up. And if growth were to slow and AIP does underdeliver, then that is exactly what is going to happen. So investors are going to watch very closely what is going to happen to AIP, what is the business looking like, and the future outlook. Now, here's the bottom line. Palantir is a great company, but not really a great stock, at least not at these prices. It has amazing long-term potential, and the valuation just really needs to be perfect going forward in the future. If you're buying at these levels, I don't think it's investing. I think you're betting on hype that never fades because reality might come back to the stock. And history shows that even great companies can have terrible investments, and it could be terrible investments if and when you buy them at a wrong price. Remember, the company is trading at the valuation of 479 PE, and you are getting a return on invested capital of about 9% here if these numbers are accurate, which they should be. So I just don't know. I just really don't know. I would tread very carefully if I had Palantir stock, I would probably be trimming a little bit right now, or I would not be owning the stock if I hadn't owned it before. And I don't own any shares, for full disclosure, but I am not looking to buy any shares currently. Now, if you found this video helpful, hit the like button so a lot of people know about the Palantir stock and where its valuation is at. And if you want more honest and financial takes that I'm giving out here today, then subscribe to the channel, because that's exactly what we do here. I'm giving my raw thoughts, all my analysis, deep diving just for you guys. Thank you guys so much for watching, and I will see you in the next one. Peace out.